Welcome, everyone. I'm going to give our attendees a moment to come into the webinar. How are we doing today?
Doing great. Thank you.
Good. All right. I know we have a lot of content to get through today. To our attendees, welcome. I'm Allison LaForgia, the managing editor of the content studio at HousingWire. Before we jump in to today's webinar, Danger at the Pricing Desk, Automating Pricing Policy to Avoid Risk, presented by Sapiens Decision, we have a few housekeeping items. Today's webinar is meant to be interactive. You can submit questions for the panelists at any time by using either the chat or the Q&A icon at the bottom of your screen. Time permitting, we'll answer as many questions from the audience as we can at the end of the webinar. Now, the fun part, today's content. I'm going to hand things over to today's moderator, Mark from Sapiens Decision. Mark, the floor is yours.
Great. Thanks, Allison. And welcome everyone to our webinar, Danger at the Pricing Desk, Automating Pricing Policy to Avoid Risk. I'm Mark Sidlauskas, Director of Marketing at Sapiens, and I'll be your moderator for our discussion today. So thanks for joining us. Let's talk about the objectives for a second. Right. So if you're in mortgage banking today, you're navigating headwinds, rising loan manufacturing costs, stagnant volume, and razor-thin margins. Lenders can't afford to rely on tribal knowledge or manual checks anymore, especially in secondary markets where investor trust can make or break profitability. Today, we'll be talking about the way business policies are implemented and managed through business rules, and where technology and process gaps can increase repurchase risk and hit the bottom line. We'll first define the problems with your input, and then describe decision automation solutions that address challenges that are related to rapid pricing challenges, creating a transparent audit trail, and ensuring that policy changes are enforced. Now, let me introduce my panelists for today. So joining me today are Mike Kelleher and James Boynton. Mike is a mortgage industry expert and founder of Adopt the Brand, a mortgage industry consultancy. He brings an entrepreneurial view and experience in delivering mortgage technology to the market. Mike also runs a weekly podcast, Mic'd Up, covering the industry. Welcome, Mike.
Thank you for having me, Mark.
You got it. James Boynton is also a mortgage industry veteran and senior consultant here at Sapiens Decision. His background includes secondary marketing and operations at companies such as MB Financial, Citibank, and ABM AMRO. James also ran pricing for MB Financial, so this is a topic near and dear to him. Welcome, James. So let's get started with our content about pricing risks. So let's start the discussion with Mike. Mike, what is driving repurchase risk?
Right now, today, repurchase risk has to do with what you're finding in your QC audits. So you see up on the screen here, there's certainly the market volatility, there's the QC misalignment, maybe price adjustments, cost of cures. But what we're finding is prevalent is inline QC. And how are you able to take the repurchase risk and bring it right to where the decision makers are? And sometimes they are doing it through shadow systems, Excel sheets, or tribal knowledge, or as you'll hear more today, it's hard-coded in the systems.
James, what's your take on this?
Yeah, I mean, my experience running the pricing desk, my fear is you have some inconsistent exception handling out there, right? You've got humans out there trying to apply policy, and then you've got yourself gaps out there with compliance. You've got systems out there, often multiple systems where you're housing your adjustments or where your pricing's coming from. So you could have price adjustment failures there, not just in one system, but in multiple. You could have different things for different investors that get you tied up. And then, of course, the market is always volatile. You're always trying to adjust to the latest LLPAs that are out there from different investors. And you're also trying to adjust to all the different things out there that your salespeople are begging for in their different markets, right? So there's different things that you just are constantly adjusting to, and you're constantly adjusting to them in more than one system. And it is definitely a challenge and can keep you up at night.
Excellent. So let's move on to the next chart here. We want to get some audience participation here. We want to understand, so which of the pricing challenges are most urgent in your organization? So we have the polling questions here. We have these choices: complexity in pricing, adjustments, technical implementations, and policy enforcement. And Mike, maybe if you could give us some explanations, make this a bit more clear as to what we mean for these survey questions.
just as a brief overview, and James can jump more into the details, but the complexity of pricing within different areas, whether it's LLPAs or county limits, but as lenders are trying to expand across the country, they're running into different complexities that are new to them. There's pricing adjustments as we are going into more non-QM and second liens. There's more pricing adjustments, not that just that you have to do as a company, but your loan officers have to get used to as well. I am heavily involved in the technology space, and the technical implementation delay is real. A lot of people are dealing with going to the EPC, Encompass Partner Connect, which is pushing back some of the promises they made to their clients. And then policy enforcement, which is a great segue over to James.
Yeah, one of the things that was hardest for me in my time as pricing manager was getting the folks on our lock desk to be able to enforce policy, right? A lot of those things are not systemically done, and they're done in the brains of the people on the phones at the time they're on the phones with your customers, right? So super error prone, and makes it even more concerning to know that those errors can happen and they can get you in trouble with your regulators, right? So you got to make sure your policies consistently applied across the board. And it's real hard when we got humans that we're relying on. And you're talking about the complexity that goes into it. Mike just touched on it, right? You got pricing adjustments all over the place. You're begging for help from the IT side, and you're always in line to try and get prioritized. And that line that you're in leads you to do things like creating your shadow IT systems, right? Creates that access database in the background that IT is not a fan of, but you need it to survive. And there's things back there that make themselves happen. It's kind of like a hidden factory that's out there that people don't really want to talk about, but I'd like to bring that out of the shadows and be able to talk about how that exists, how it keeps you up at night, and then ultimately maybe a little bit about what we can do about it.
Excellent. So I think we probably have our results in from our polling. Mike, how would you interpret these results? I'll start with you.
I'm excited that the main answer is in my wheelhouse, which is technical implementation delay. We always had a saying back at Easy Mortgage Apps, it'll be twice the cost and take 4 times as long as somebody says to deliver. And I think that's just the universal fact of software. So when we say one of the benefits of what we do is hard coded, what we are saying to the layperson is, or I should say, like The Office, Michael Scott said, talk to me like I'm 4. It just means the vendors you're dealing with, if you want to change, it's not going to happen overnight. And there is an implementation schedule, and you need to get in line. And so I think that's what the complaint is. As times are getting a little bit tougher, those delays are happening more and more with the vendor partners.
James, how would you interpret some of these results?
Yeah, I mean, this is the stuff I live, right? So it makes sense to me. And the technical implementation delay, when you've got things that happen, whether it's a new product you have to put out, whether it's a natural disaster that happened, and now you've got to figure out how you're going to extend a whole bunch of loans that are in a certain area because something happened out in the world, or it's just the market moving real fast, right? Competitors come up with something, you've got to react to it. I mean, all that stuff ends up dinging you, and you don't have time to wait. Like that time that you have to wait is money you're leaving on the table. So, I mean, I can see why that is number one.
Let's move on and talk about the impact on the business that these challenges have. So we look at them at various different levels. And Mike, can you take us through this?
Yeah, I think at a macro level, if you're on LinkedIn, you're seeing a lot of lenders need to recruit harder than ever. And one of their strategies is a transparent P&L where they're offering raw pricing and working their way back. And when you do that, you expose yourself as an industry to many different people wanting to see how everything works. And therefore, you need to, as James talked about, you're more on the clock to make these changes faster. And if you're relying on third-party vendors, that can often be slower. And if you're relying on shadow systems, which could be technology, could be an Excel sheet, could even be you have workers using printouts to move faster while on the phone, all of this makes it harder to have transformational shifts. So I think when I originally talked about QC and the ability to deliver to investors a quality loan, one of the problems that we see is most of this legacy software is built in milestones. So a lot of these checks and balances don't happen in line. And when I'm having conversations around Sapiens, that is where the big institutions find the biggest lift is you can bring it rather than at the toll booth at the end of a milestone change in real time. And also the ability to have subject matter experts not have their ideas lost in code. So when you look at some of the hits to profitability or impact on business, it's those cost to cures at the end. And if you could address them further upstream or more at the point of where you took the application, you would be able to avoid many of the costs that go into originating a loan. And it's hard to do that if each subject matter expert is siloed within a software that doesn't speak to the other subject matter expert. When you have one place where it's a no-code environment, and they're able to see true decision logic or a visual logic layer, I always called it the iPhone moment. From my background, iPhone moment was very well popularized by the term. Anybody that went from a BlackBerry to seeing an iPhone and that you could touch screens, they couldn't get it out of their head and go back. And that was my experience with Sapiens decisioning and the use cases. I'm sure James can get more into the granular lift of how you could get started.
Yeah, I mean, it's funny you call it the iPhone moment. I've called it like once you see the matrix, you can't unsee the matrix, right? So when you finally have a chance to see what you're going through, what you're living through every day, and kind of pull back, take a moment to breathe, and realize it's not just about pricing loss or rework, but I mean, down on the right-hand side of the slide talks about the inability to implement, audit, and reinforce rapid policy changes, right? That's a big deal. It's all about timing and to be able to do that and see how you can do it and you can control it and you can do it. Mike talked about it with terms, right? It's in business friendly language. It's a way that you can control, and those ideas that you guys have, all of that tribal knowledge, all that logic that you've got, the business logic, that's an asset. Like all of that knowledge you have is an asset, and it's lost in several different systems today. And it's hard to keep track of and keeping that stuff straight and knowing where it applies, when it applies, how it applies. All that's really complicated to keep track of, and you're lucky if you can. Hope we could talk a little bit more about ways that we can do that.
And I'll just
Great.
add one more point. Yes, I have not worked a pricing desk, but I don't think anybody's been on more software mortgage demos in the last 10 years than me. And I've seen it all. And I can't name one other that I call an iPhone moment. Like once you see it, you can't unsee it. This was truly it. And when you do see it, you will see exactly what I'm talking about, why James agrees. You can't fake that moment. And this Sapiens has it.
All right. We're going to get red pilled here. All right. So let's move on and talk about some of the challenges. So we talked about defining what the problem is, and now we'd like to get your opinion on, well, what are the barriers to addressing these challenges? And we've laid out a couple of challenges here in terms of acceptable risk, lack of resources, vendor lock-in, fix with people and not the technology or other. So James, if you could walk us through your assessment of these factors.
Yeah, I mean, for me, I think starting with the risk is considered acceptable. It's one of those things that may be a headache for you in pricing or for part of the pricing world, but other people consider that acceptable, right? They think it's okay the way it is. It's not worth the change. Could just be you can't get resources. I mean, that is definitely a challenge anywhere and everywhere. Vendor lock-in is interesting to me, right? So you've got a vendor that just can't do any better. You're already too far in bed with them. You can't get out of that. So vendor lock-in is a real thing. And oftentimes, man, time I spent in mortgage, I can't tell you how many times you saw bodies thrown at the problem. So a whole bunch of people, not necessarily the technology. And a lot of that is because of things we talked about on previous pages, like you're just in line, right? Or you can't get the IT resources or whatever it is. So fixing things with people or technology, or is it one of the things we haven't mentioned yet? Is it something else? Which I would love to know what that is.
Mike, any comments?
I'll just say vendor lock-in is top of mind to me right now. You traditionally had one PPE firm that had about 2,000 clients, and now you're starting to see two other names very current. So people are finally making moves. There's inertia around that. Plus the elephant in the room that has an LOS, is always going to offer a free version, and people are going to try and dabble in, does that make sense? And when you move, all of that business logic, and that's the point of the message behind Sapiens decisioning, all lenders are treating business logic like a second degree asset. And it should be your first degree asset. It should be your major asset. And if all of your PPE logic stays in that vendor you leave and you can't bring it to the new one, it is second degree asset. It's not first. If you're able to bring it and plug it into the new vendor, not only do you control that IP, you build value, but it can take care of anytime you're going to change different technology vendors. You're going to run into change management. You're going to run into humans fighting against it. You're going to run into edge cases you weren't ready for. And I think that's the magic. If your business logic is built, that when you port it over to this new vendor, you have all those edge cases taken care of because your business logic is your chaperone or your net that you need. It makes it less about vendor lock-in.
Okay. So I think all the results are in. Let's see the results. Okay. Lack of resources leads the way, followed by vendor lock-in and fixing with people and technology. So James, any surprises here? What you expected?
I was just a little bit surprised I didn't see any other, but the risk being considered acceptable makes sense that that's low, right? There's not a lot of things in pricing that are considered acceptable risks because it's all money and it's all right there in the beginning. But every now and then you get a few of those. But it is interesting to see that lack of resources, for something that is as critical as pricing, whether it's the regulatory environment and the dangers of being out of step with what your regulators expect, or just potentially losing money because you priced something wrong, and that could be something that you gave away money on you didn't mean to, or something that you're pricing way too high that you're not able to gather that or gain that business on. I think just knowing that the value that comes in pricing, that having lack of resources being number one, surprises me a little bit. But I mean, nobody has all the resources they want, so I guess that there's some sense to that for sure.
Makes sense to you, Mike?
Yeah, the lack of resources makes sense. Everybody cut as much as they could, and they cut the people that would maybe help in this area. But listening to James, that's the whole story to really zoom in on, is sometimes you cut without doing a deep business analysis of ROI on the ancillary or collateral damages. And he just hit it. You might be cutting somebody that had the ability to prevent you from mispricing or overpricing.
Yeah.
And that's scary.
Yeah. And that seems to be a trend in the industry. Fix it with the people technology. And because of that, you may lack the resources when you really need it. So let's shift gears a little bit. We've talked about the problem. We've talked about the challenges in fixing the problem. Now let's talk about the solution, Sapiens Decision, and what we bring to the table. And James, if you could give us an overview of what the product is all about. We talked a lot about logic. What does all the logic mean with Sapiens Decision?
Yeah, the logic, I think, and I'm gonna start with that second bullet point there, enables business users. So Mike talked about treating your logic as a first degree asset or first priority asset, not something secondary, right? And that is massively important to know and to hold on to, right? So in this case, with Decision, you can have the business users do it. It's not business logic that is in IT or business logic that has to be translated and stuck in a requirements document somewhere. It lives with your business users. They can use the system. It's actually a true no-code platform. So there's not anything that, I'm just thinking back to the times when I would try and work in different databases and try and read code that when I was a pricing manager, I wasn't a coder. So this is something that truly is no code. Trying to read through code and sift through code and see what that was going to do to me was a nightmare and a headache for me. And the other thing that's really nice about this, Mike touched on this too, is it's system agnostic, right? It doesn't matter what system you want to tie it into, because it's a modern software as a service type of solution. It can tie to multiple systems with this one set of business logic defined by your business users, which is great. If you've got existing business logic in other systems, or maybe it's COBOL code or whatever, there's some AI enablement you can use to pull that out, pull the business logic out of that and get it into this decision that ends up using business terms that business users can read. And then kind of the proof being in the tasting of the pudding on this one, there's some big dogs out there that do use this, right? I mean, we've got people like JP Morgan Chase, Bank of America, Wells Fargo, US Bank, and even Freddie Mac that use this tool and use it pretty effectively. So it's not just something that is, if you haven't heard of it before, it is something that's out there and being used in the market. It's not fly by night type thing. It's well established.
Hey, James, explain something to us. You
Yeah.
talked about a decision, making a decision. And I see
Yeah.
the picture on the right side. It's essentially a
It is.
decision
Yeah,
logic
that's the
tree. Could you
software.
explain? Yeah, there it is right in front of us.
Yeah.
Explain to me what the decision is, what a decision is, and how the graphic on the right side just kind of flows into that, how it's used.
Yeah, I mean, this sounds overly simple, right? But it is this easy, right? So decisions, anytime you have to make a choice, right? If it's based on criteria, and if you want to back it up and make it really simple, it's all just if-then statements, but managed in a way that you can use if-then statements piled and piled on top of each other, intertwined with one another, and doing all that type of thing. But if you look at the diagram on the right, or that image on the right, you can see that there's a box at the top, and that box is the one thing that is represented in that decision. So that decision is all those boxes, and all the different boxes beneath the top one are called supporting logic. So it's really just a way to take all the if-then statements that you need to get to an answer and figure out how they're related, how they relate to one another, how they support one another. And really, it takes all those incredibly complicated things and makes them nice and visual and simple to follow. It's something that you can learn to read in 5 to 10 minutes. It's very powerful in terms of visibility. You can see it right there, and the structure of it is always going to be the same in terms of the principles of the structure. So once you know how to read one decision, you can read them all.
So if I want to determine if this pool of loans fits my investor criteria, that would be the decision. Does it meet the criteria? And I'd use this structure,
All that wonderful
figure it out.
supporting criteria to give you a yes or no, it fits or it doesn't, right? So all those different pieces and guidelines from the investors you can layer in there and figure out not just from one investor, but multiple investors, whether or not it gets to go to investor A, B, or C, or maybe just A or B and C, like all those different types of things you could layer in there, and as well as doing any of your LLPAs and all that pricing structure as well. Yeah, it's anytime you'd use an if-then statement, if you can logically think it through that way, decision does that for you, and it'll help do it consistently across any system you want to be able to tie it to.
Okay. Let's go to the next chart and talk about where this fits in the stack. And maybe you
Speaking
could
of
give us
systems,
some, yeah, there we go. And if you give us some example use cases, we've talked a lot about potential things that go wrong. How would decision resolve some of these issues? And Mike, jump in here too.
yeah, I don't know, Mike, you want to go first, and I'll jump in.
I love this visualization. Long overdue for a business logic layer in the mortgage industry to have your people interacting on the bottom, let's say with the point of sale, and then your users up on the LOS, sort of separate on different layers, and different POSs dropping into LOSs at different times. You're having so many silos, and this breaks down silos. I'll give you a use case on a company we just signed up. I was working with them, and they are in the non-QM space. And in fact, talking to quite a few non-QM because it's getting popular, and it should be. The margins are there. The branches like it. And it's going in 3 phases. So phase 1 will be, and James mentioned, this software is used every day as an AUS on the conventional side by everybody attending this. Non-QM, we constantly heard, you can't make an AUS for non-QM because you have to have a gut instinct, or you got to be able to look at bank statements. That is the definition of tribal knowledge. So they are going in 3 phases. Phase 1 is for the underwriters to better green, yellow, red, and that's going to surface in the LOS. Then phase 2 will be maybe 8 months down the road, maybe 9, where the AEs out there will be able to, on the road, tell their lenders, IMBs, or brokers, whoever they're dealing with, what they see as potential conditions, just like running it through a conventional AUS today. But this will be a new non-QM AUS where they'll be able to give conditions and help them. And then down the road, phase 3 would be another block you might not even see here, but you'll be able to surface it in a web portal where the loan officers can actually go in, price it out, and maybe they didn't attend the webinar, but they're still able to go with the behaviors that they're used to see if this should qualify for a non-QM. And with the world going Rocket and apps like Zillow, the riches are in the niches. And if your team can understand non-QM, there's going to be a lot of opportunity there. But James will tell you, and he can go in any direction he wants, but you could replace non-QM with anything in that scenario.
Yeah, I mean, you talk about riches being in the niches. And so if you look at that middle layer where you've got AUS, MI, locks, LLPAs, assignments, saleability, underwriting, every lender I've ever talked to, every lender I've ever been with, always has a slight little tweak on how they want to do stuff from the standard. And that's one of the things that is that tribal knowledge, right? How do you have that done? How do you want it carried through from system to system? Can you maintain all that business logic, do it consistently, and have it apply from your LOS to your POS to your CRM to your PP? Can you do that? And Decision lets you do that. It lets you be that hub for all that business logic that can go from system to system and be applied the same way every time. It's the same logic. And the beauty of it is when you're building it, it's all in business friendly terms. And when you spit it out, it's actually the push of a button and it compiles IT quality deployable code that you can then use in your systems directly. So because of the wonderful structure of Decision of that image you saw in a couple slides ago with the boxes and a single question at the top and all the supporting detail underneath it or all that supporting logic, because it's built that way, Decision can spit out code that works with anyone or all of those systems as long as you've got API hookups for it. So it can be its own thing. Yeah, go ahead, Mike.
Reason the GSE loves it so much is they went from 90 days to implement the change to less than an hour. They can now put it into Sapient. So when you think if there's a hurricane coming through and they need LTV to go down so that all the loan officers across the country are running it, it goes refer for a little bit while they figure it out. Whatever the scenario is, you're able to do that. And another example of business logic as a second class versus a first class, say you have your own program and you want to move it as quickly. The leading LOS that everybody is on, if you want to change a rule because that's not their primary business, then all the loans that go through follow the new rule. And so it can start to cause a mess. Whereas with your own logic, you could say all new loans make change after March or after June 15th. All existing loans can still follow the old rule, new rule. Having control of your business logic there has been a huge interest for people that have gone through the pains of the number one LOS provider. If you change a rule, all the loans that go through it hit that either new rule or old rule. They can't manage two rules. And you can see how that becomes a ecosystem that doesn't really make sense.
Yeah, and the audit trail for Decision is wonderful. So like to your point, Mark, if you've got something where you need to establish a new rule based on lock date or application date or whatever date you want, right? You can do that. And you can see exactly when something applied and why. So the audit trail is great if you have an auditor that comes in and has questions for you. It's so easy to answer. And just being able to apply it to different systems when you need, not to two different systems, to any different system, whenever you need to do it. And you can do it very quickly, to Mike's point. So the long pole in the tent there is going to be you trying to figure out what you want to do. It's not actually making it happen once you decide to do it.
Excellent. So thanks, James and Mike, on this. Let's move on and get to some of the benefits and begin to wrap this up. We can go to the benefits here. And James, if you could take us through a high level here of what you see the benefits are to Sapiens Decision.
Yeah, we just touched on the first one, right? Business, user-friendly, fast and easy, no code, right? You're not expected to be a coder to use Decision. And in fact, as a business user, my favorite toy to play in was probably Excel and sometimes Access. And this just was right in that wheelhouse, right? Nice and easy, nothing too crazy. I didn't have to be a developer to read it or to share it with other people and teach them how to read it as well. The bulletproof business logic, there's a testing facility within Decision that makes it so that by the time you deploy it, you know your business logic is bulletproof. You don't have to hand it over to IT and wait for it to be hooked up to other systems to see if your logic's bulletproof. You know before it goes, and that the testing facility within Decision helps you do that. I can't tell you how much I would have loved to have had that as a pricing manager. I mean, my experience as a pricing manager is one of the reasons I'm here. I was a client, right? So it's one of the reasons I moved over. It's because I believed in it. And we talked a little bit about the audit trail, right? It's got complete accountability. You can see the moment a person creates a data element within the tool and who approved it. And then you can look at all the models that build upon that. So um, you can tell the moment it got started, you can tell who approved it, you can tell when it was deployed, when it was no longer active, whatever you want to see, all that audit trail is in there. And it's a wonderful tool for those auditors that want to question, why did this lot come out this way? Why did you price these loans this way, but not that way? Like you can follow every one of those scenarios through the tool.
Great. Why don't we go to wrap things up on the next chart? And Mike, if you could take us through what we've heard, some of the major takeaways here before we get into the Q&A.
My major takeaway is you have to be hyper local to win in this new market. Brian Hale gave a great example at the HousingWire Economics Summit, where there are so many different, there's 42,000 zip codes, there's 520 MSAs, and almost every lender prices broadly. And so they're either overpriced in certain markets or they're underpriced and losing money in other markets. And it's because the famous saying that Jim Deach taught me is the people that got you here aren't going to be able to get you out. And the systems that got you here aren't going to be able to get you out. This is a new system that allows you to take better control of the new market, which is hyper local, which is catering to the loan officers and providing transparency like never before, and getting out of vendor lock-in and treating your business logic like a first-class asset. And this business logic, when you go to exit someday, will grow and grow.
Thanks, Mike. So why don't we wrap things up and turn to Allison and get some Q&A questions from the audience.
Right. So let's jump into our first Q&A questions. We have time to get through as many as possible. So the first question I have is, let's say we're replacing our PPE system with another provider's. Is the Sapiens solution an option?
That's a good question. I think one of the things that Sapiens does well is because it can talk to almost any system you need, right? As long as you've got an API, you can communicate back and forth with the code that comes out of there, right? So depending on what you need your PPE to do, it's not going to generate a rate sheet for you. That's not what it does if you're looking to do that type of thing. But if you want to be able to price loans and make sure that all of your LLPAs are captured in there, absolutely. So it really depends on what type of thing you're trying to do with your PPE before I can say a flat out yes or no. But can it help you? Absolutely. Will it be faster? Absolutely. I mean, just the number of things that I remember having to go through and the systems I went through to be able to build a new product or to update an LLPA, it made me want to pull my hair out. And I know one of the concerns that comes up when we talk about using Decision is it another system? And I would submit to you that it's not necessarily another system as much as it is a different system. And I would even posit that it's a better system. So you're doing all of these things today. You're updating your LLPAs, you're building out new products, you're creating rate sheets, you're doing all of these things and trying to tweak your pricing with as fine a point as you can for every little market, to Mike's point, right? You got to be able to win locally, not just nationally. And being able to scale that up, you end up winning nationally. But Decision helps you do that. It helps make all of those little pieces, whether it's just adding up pricing or trying to understand what LLPAs qualify for different scenarios, it can do that too. So it's incredibly powerful. I don't know that it entirely replaces systems as much as it supports all of those little things that systems don't do for you today. They don't do custom screens. They don't do custom little features, and you're working with your vendor to try and make those little tweaks that you need to happen. You try to make them happen. And right now, you're either waiting in line for them or you're doing them behind the scenes with another system or maybe multiple systems. And I think this is where Decision lives and really helps make all those things that have you pulling your hair out that are off on the side and seem like just incredibly loud noise. It quiets the noise and it helps you fight through those things and get through them in a way that's auditable, it's consistent, and it can be applied, like I said, across systems, which is just, it's wonderful to have that reusability.
And I'll add, if you're trying to replace a PPE with this, that's more of the same problem I'm always trying to shake up, because then that puts you in a box and you're only using Sapiens to try and use it like a PPE would. The largest banks love this based on speed alone, and they can't rave enough about it. They use it for fraud, and they use it for, so it doesn't just stop at where the PPE would. They use it on their portfolio overnight, every night, on everything you heard today, plus any conditions that might make it move to a different pool. I think when you try and use this to replace a PPE, the possibilities get closed in. This should be, because you don't need to send it over the wall to a coder, it should make the impossible possible now and put the power in your subject matter experts' hands.
Yeah, that telephone game from subject matter expert to requirements analyst to developer to tester back, like that all disappears. And it's really nice to live in a world where you don't have to have those translations that don't turn out how you expected them to when you first gave the requirements, right? So being able to do that is a big deal.
So,
And to your point, like Mike, it's not just pricing, right? It can be used anywhere, whether it's income calculation, looking at all the different data elements from an appraisal to see if it's a valid appraisal. I mean, it can be used in so many different ways that it's hard to even wrap your head around it. But can it be used in pricing based on my 6 years in pricing, running pricing? Yeah, absolutely.
so you guys mentioned a lot of things that I would think would be extremely appealing, but I have a question just to get real with you guys. How big of a team do you need to manage the rules and decision software? It sounds like it's capable of so much. Am I going to need a whole department to manage this? What's the uplift?
That's a great question. I'll let James dive in specifically to pricing, but I'll tell you a cool story. We just came back from Chase, and they have, I believe, 300,000 employees, let's say 14,000 square feet of office space, or 130,000 square feet of office space. Yet they only have 3 people that run Sapiens decisioning, and you can come to them, and then every 14 days it comes out exactly like they promised it to everybody. So that shows that your team doesn't, it's more about, can the subject matter experts show up to help you create more logic, from my experience. What about yours, James?
Yeah, I think that's exactly it, right? So just having those subject matter experts, we talked about it being business friendly. So it's an interface that regular business users, SMEs, can use. That I mean, they're using other things today, whether it's Word or Excel or whatever format they're using to put requirements towards a requirements analyst or whatever to get them into IT. All of that is, to me, more complicated, less specific. It's more ambiguous than the tool that is Sapiens Decision. So like I talked about, it's not another system. It's a different system. And like I said, I think it's a better system, and it doesn't require you doing more work than you're doing today. You're just doing it slightly differently. And like I said, I would say better, smarter.
Okay, but how long is it going to take to implement? So better, smarter, better decisions, capable of touching more than one place of my business workflow. What does time look like from implementation?
I mean, it depends on how much you're doing, right? That's the consultant answer, right? It depends. But I mean, to Mike's point, like he talked about earlier, it's going to cost, would you say, take twice as long and cost 4 times more than you expected? And I feel like my experience with Decision has been, I'm trying to rack my brain. I can't think of a time that we missed a deadline. We're usually, if we're working with an IT project, it is a short pole in the tent, right? We're going to be done in plenty of time. By the time, requirements are done, if we're going through requirements, we're writing the requirements out in the tool as people are doing requirements for the rest of the system. And for the most part, we're able to have something that either the SMEs have built themselves or somebody who helped them build alongside built that and has it done well ahead of being able to test the rest of the systems. It's if you're building anything with other support, it will be the short pole in the tent. It'll be done quickly. If you're doing it independently by yourself, like if you're that SME that's making changes to your rules or putting in new rules, like I talked about, it takes me longer to think about what I want to do than how to build it. So once I know basically what I want to do, the building part is not the hard part. Neither is the testing, because of the built-in tester. It's the figuring out what you want to do. And Mike, you touched on it. Like, don't put this thing in a box, because there's way more to it. And because it's so powerful, it's almost like saying, well, what can you do with Excel? Like a ton. Like, how crazy do you want to get? I say that, but I also would tell you that the power of decision for what it's used for, I think it's more powerful, and I think it's simpler in terms of the structure of. Because of the structure, it's simpler. And I mean, there's a whole book on the structure, but I won't get into that. But I actually have the book here. But I just think it's an incredibly powerful tool, and to try and limit it or put it in a box is not just shortchanging the tool, but it's shortchanging yourself if you decide to invest in it.
And to be crystal clear, twice as long, 4 times expensive is when you have to hard code. So that doesn't apply to this. And in fact, Justin
Right.
Patterson, who is, anytime you jump on a demo with me, he's on there, and he is just the best to listen to. And he talks many stories about how once his company, which was a top 100 IMB, understood this, the head of product and credit, anytime they had a new program, would go to Justin to build it in this to make sure everything was taken care of. And that was 14 days. So within 14 days, any new product would be in production. And by day 10, they knew sort of how it was going to be, and knew on day 14 it was going to come out exactly how they wanted. And it would hit all those layers. It could surface in the LOS. It could surface up channel to your CRM. It allows all the people involved in the new product to be able to interact with those business decisions versus being locked in, obviously, and siloed. So 14 days. But if you want like an AUS, it's going to take 6 to 8 months. But anything that you want to solve that's happening today, should it be on 14-day sprints?
So I have a question from the audience for you all about integrations. Do you integrate with Encompass through an API?
So you can integrate with any API. So if you're a lender and you have the ability to have the API, then you can begin to build it out. If your CRM has an API they're willing to give you, you have a logic layer that you write all of this out, and like Figma, or as you saw, the decision tree that you would understand, and then it exports in the code needed so that you can connect. And that's where we help as well, is making sure that you tell us what the API needs to look like, and we can go ahead and connect. And all of the major vendors, I would say, in mortgage, judging by the clientele we have, we do integrate in some way or in every way.
So to reiterate to our audience, anyone who might have a specific question about that integration piece, it sounds like a very simple, if you have API access, you can integrate. Is that an incorrect statement?
That's correct. That's how.
Yeah, so if you can make API calls and accept the responses, we'll be in pretty good shape.
There we go. All right. And my next question is, how come I haven't heard of Sapiens before?
Who wants this one?
I could jump in on this one. So typically when a vendor enters the market, there's like 3 different cohorts, I think, in the mortgage industry. And then there's the big media blitz. And we are entering that space, especially via the non-QM. But the majority of those clients that you heard are larger banks and GSEs, and they are in a different area than you would hear at most conferences. So I think that's why you haven't heard of it yet. But this is really the coming out webinar and the here we are moment. And I know it's going to change. I'm going to be talking a lot about it. And I think it's much more impactful, though, when you hear somebody that's used it for 6 years at a large size lender like James. I think it's going to start to resonate. And all it takes, you know this, all it takes, Allison, like 4 or 5 to fall in love with it at the IMB level. You know, go to a couple HousingWire conferences and it catches fire. And I have no doubt it's going to.
Right, guys, we are rapidly approaching the end of the hour. I'm going to turn things over to Mark for closing statements, and then we will wrap up today's content.
Thanks, Allison. And thanks to our panelists, and thanks to the audience for tuning in today and finding out more about Sapiens Decision. So we're going to be at the MBA Secondary and Capital Markets event in New York City in May. If you'd like to meet with us, Mike will be there. And last point, this webinar will be on the HousingWire site as well as the Sapiens website. So again, thanks for joining us, and so long for now.
Thank you all for joining us. We'll see you again soon.